be sensible economics which will have a booster or indirect kicker to politics? Mr. Puri?
Well, you see, the way we have seen all the budgets in the past, the way we have seen various policy interventions and actions taken by the government, I think all these actions are focused on building a sustainable, inclusive and competitive economy. And that's been the consistent thread right across. So whether you look at energy transition, whether you look at the farm sector, whether you look at the digital infrastructure, the physical infrastructure, the PLI schemes, I think all of these, if you put it together, all of this is around nation building, building India, preparing India for Viksit Bharat. I think that's the theme that, to my mind, will continue as we have been seeing consistently over time, and this is something that we believe will be very good for the future of the country.
I'm tempted to ask you one more question which is specific about the sector and the company you represent. You know, as a stock market commentator, every time when we come to budget and before we finish any sentence on budget, we start thinking about tobacco and taxes on the budget, on the cigarette sector. Do you think this time around we are in for a no action kind of a setup?
I think here the objective is to discuss the broader economic issues. I would leave the specific company related questions for another occasion. Happy to discuss with you on at a time when we are discussing the company.
Thank you, Mr. Puri. But right now I'm just going to change gears and just ask you another follow-up question. And a follow-up question, Mr. Puri, really would be that in order for India to become competitive, you really need advantage in terms of cost of capital. You need advantage in terms of labor, land and talent. So when it comes to cost of capital, Mr. Puri, the benchmark rate in India is still at 7% higher. Banks are struggling with their liability, which means that interest rates are unlikely to come down in a hurry, and we have inflation which in a sense is structural between 4 to 6% or 5 to 7%. So do you think the biggest disadvantage which needs to be addressed, whether it is tomorrow's budget or upcoming policy action, is that how do you bring the cost of capital down?
See, I think the policymakers are very cognizant of this. And we know the backdrop against which the monetary policy in India has been monetary policy has aligned to the changing circumstances. And in the context of the global disruptions, the challenges of inflation, particularly more so overseas, etc., and they needed to take certain measures, which they have taken, and I would believe, and that's why India, despite the challenges of climate emergency, geopolitics, the challenges we had during COVID and so on and so forth. Despite that, we are the fastest growing economy. We were the center of gravity in Davos. The Indian economy is expected to grow at 7% plus going forward. So we are all in all in a bright spot. Yes, more needs to be done, and at the right time, I'm sure the policymakers will make the right changes at the right time. So all in all, I would say it's been a very astute management, and we are in a relatively happy position. We could be in an unhappier position, of course, when these things happen, but there is a time for these things to happen.
Mr. Dinesh, a blend of perhaps CII and the group which you represent, TVS Group, which in a sense has a deep understanding of manufacturing and logistics. Now, if the renaissance moment for Indian manufacturing sector has arrived, and if manufacturing has to become competitive, what do you think needs to be done in the budget or outside the budget to ensure that the good head start we've had post-COVID, courtesy PLI scheme and Atmanirbhar programs of government, that only accelerates? Mr. Dinesh.
Thank you. So I think if you look at the focus of this government, I think I would say there have been on two pillars. One is on the ease of doing business and the cost of doing business. Both of these pillars are absolutely essential for building the competitiveness of India and Indian manufacturing. And there are two elements to this. One is to maybe get the overseas investment or the overseas manufacturers to come into India for India's domestic market, and also make it integral for their global value chains and global supply chains. So that I think is where the PLI scheme and making necessary investments for the infrastructure has attracted and made them come here and make that investment happen. The second is for Indian companies to utilize this opportunity and scale it up significantly, which is what again all of these three factors are supporting with. The second element which you said, logistics and the supply chain, if you look at what this government has done is focused on the digitization of that supply chain. And that is, in my mind, a biggest differentiator as far as India is concerned. I think India has taken the lead across the world in terms of the way in which the visibility of the data and infrastructure through the PM Gati Shakti scheme or through the tracking of the vehicles through both the ULIP, the Unified Logistics Interface Portal, and the National Logistics Policy speaks about. Therefore, all of these coming together, in my mind, you already said that maybe this is a sweet spot for India's manufacturing sector. But the way I would look at it is the combination of logistics costs, infrastructure, and the building the competitiveness of Indian industry. I think the time has arrived for us to be able to access that. I just want to add one last point to the cost of capital question. If you really look at where India has been, there are two elements to it. One is the sovereign rating of the country. The Finance Ministry have been speaking about as a significant improvement in India's overall metrics. The second issue is the access to it, both of which I think are again very strong pillars of approach, which builds to the point of building India's competitiveness going forward.
CB, closing comments from you. What is that you don't want to see in the budget? We've talked about, okay, it's about stability, keeping the momentum going, but sometimes things may happen which may not be so policy friendly, and there could be compulsions which could be at play. So CB, closing comments from you. What do you think you don't want to see?
So, during, as you said in the opening of the show, this is a time election budget. And therefore, this budget is the last budget, be it interim, but a budget before we go for elections. And what we do not like to see something which is not populist. So far, during the election years, in the last couple of times, we've seen popular budget, but not populist. So I'd like to create the difference, and one would like to see that really happening. I'd also like to add that we keep to the type of discipline that we have kept on the fiscal prudence, etc., and and would not like to see anything which will really compromise with our. You heard about the sovereign rating, the ratings that India has got, and secondly, any compromise with our growth. I think we need to keep on the growth track, the budget to be something which should be on the growth track, and yes, of course, a popular and not a populist budget.
Mr. Dinesh, Mr. Puri, CB, gentlemen, thank you so very much for joining us, and certainly look forward to much more of you, and certainly look forward to the CII reaction to the budget immediately after the speech. Truly grateful that you could accommodate this interview request. Thank you very much.
Thank you. Thank you.